Imagine turning your everyday income into a growing wealth empire without hitting the lottery or inheriting a fortune. It starts with transforming your mindset and actions today. Dive into the world of financial empowerment with these 8 life-changing money tips that could turn the financial tide in your favor, setting you on a path to prosperity you never thought possible. From the power of investing in yourself to the secrets of passive income and the magic of early investments, discover how to make your money work for you, not the other way around. Get ready to unlock the financial strategies that the savvy few have been using to build their wealth. Your journey to financial freedom starts now. 1. Avoid hoarding cash. Invest in yourself. When we're starting out in our careers, it's common to want to save every dollar we make, as we're told that saving is the key to financial security. However, to truly unlock our financial potential, we need to shift our perspective. Investing in ourselves means more than just spending money on education or skill building. It's about recognizing that our ability to grow and adapt is our most valuable asset. Take Sarah, for example. She's a graphic designer who decided to invest $10,000 in a coding bootcamp. Though it seemed like a lot of money at first, within a year of completing the course, Sarah's income had doubled. Her new skill set made her more valuable to her employer and opened up freelance opportunities she couldn't access before. According to a report by Course Report, the average bootcamp graduate sees a 56% increase in income after finishing the program. This is proof that investing in ourselves is worth it. Continuous learning is crucial in a world of fast technological advancement. A report by LinkedIn found that 94% of employees would stay with a company longer if they invested in their career development. This means that investing in yourself is not only beneficial for your financial growth, but also for your professional satisfaction and longevity. Personal development is like planting a seed that grows into a robust tree. It's more than just immediate gains, but is also about setting yourself up for a future where you are continuously evolving, adapting, and increasing your value in the marketplace. By prioritizing self-investment, you're not only saving for the future, but actively building it. 2. Dismantle the walls of knowledge. The saying, "knowledge is power," has changed in today's interconnected world. It's not just what you know that matters, but how you share it. 2 entrepreneurs named Maya and Alex started a new business by combining their expertise in technology and marketing. Instead of keeping their knowledge to themselves, they hosted free webinars and shared valuable content on social media. This approach made them thought leaders and attracted many followers. As a result, their business grew by 70% in the first year. According to a 2019 study by LinkedIn, 80% of professionals consider professional networking to be key to career success. This shows how important it is to share knowledge. Sharing knowledge is a powerful tool that can lead to breakthroughs and innovation. Collaborative projects like Linux and Apache, which are built and improved upon by thousands of contributors worldwide, have proven that open-source knowledge can dominate their markets. A 2021 report by GitHub highlighted that open-source projects have a 31% higher productivity rate compared to those that are not, showing the benefits of shared knowledge. Breaking down the walls of knowledge accelerates growth and fosters a culture of openness and innovation. This approach builds a community where ideas can flourish, leading to breakthroughs that might not have been possible in isolation. Sharing knowledge is not only about giving away secrets, but it's also about uplifting everyone involved. 3. Upskill creatively. In today's world, change is the only constant, and being able to learn new skills is key to survival. For instance, let's take Elena, a traditional artist who learned digital illustration. This not only expanded her skill set, but also opened up new opportunities for earning money through online art commissions and digital workshops. According to a 2021 survey by Adobe, digital artists can earn up to 60% more than traditional artists, highlighting the financial benefits of diversifying skills with new technology. The story of Tom, a high school English teacher, shows how technology can be used to make learning more accessible for students. Tom created a YouTube channel where he combined his teaching skills with video production and marketing to build a community of over 100,000 subscribers. A report by the Global Education Monitoring Report by UNESCO suggests that teachers who use technology in their teaching can increase student engagement by up to 50%. These stories highlight the importance of being able to adapt in a world that is changing quickly due to technology. Developing new skills is not only about staying relevant, but also about using your uniqueness to create value for yourself and others. By embracing creative upskilling, individuals can turn their passions into sustainable careers. This proves that in the 21st century, creativity and adaptability are among the most valuable investments one can make. 4. Transform active income into passive income. Are you tired of trading your time for money? If so, you're not alone. Many individuals are seeking ways to generate passive income that allows them to enjoy a more flexible lifestyle. Passive income is not just a financial strategy, it's a game changer that empowers individuals to leverage their skills and expertise more efficiently. Let me tell you about Lisa, a software developer who transformed her coding skills into a profitable online course. At first, it required a significant effort, but once the course was live, it generated a steady stream of income without her constant involvement. According to a recent report by Teachable, creators on their platform earn an average of $5,000 per month from courses, highlighting the immense potential of passive income streams. Similarly, Kevin, an avid photographer, uploaded his photos to stock image websites. What started as a hobby soon turned into a lucrative passive income source, with him earning royalties every time someone downloaded one of his images. A study by Shutterstock revealed that contributors can earn up to $120 per download, showcasing the financial benefits of monetizing your hobbies or skills. People can create financial stability and freedom by converting active income into passive income. This approach can diversify revenue streams and help accumulate wealth over time. It proves that leveraging one's skills and knowledge in innovative ways can earn money even when sleeping. This is a powerful way to support life goals and dreams. 5. Seek rising tides. Capitalizing on emerging trends is akin to catching a rising tide. It can lift all boats, provided you're prepared. A prime example of this is the story of Sophia, an entrepreneur who noticed the burgeoning demand for eco-friendly products. By launching a line of sustainable household goods in early 2018, she positioned her startup at the forefront of the green movement. This strategic decision paid off handsomely, with her company experiencing a 300% growth in sales within the first year. According to a Nielsen report from 2021, products with sustainable attributes make up 22% of the total market and are growing faster than their non-sustainable counterparts. The rise of cryptocurrency is an example of a trend that can yield huge returns for those who invest early. People like Marcus, who invested in Bitcoin when it was valued at less than $1,000, experienced tremendous financial success as the value of the digital currency soared to almost $60,000 in 2021. According to the Cambridge Center for Alternative Finance, the number of cryptocurrency users increased fourfold from 35 million in 2018 to 101 million by the end of 2020, underscoring the significant potential of investing in emerging trends. These stories remind us of the importance of staying up-to-date and adaptable in a rapidly changing market. By recognizing and taking advantage of trends early on, individuals can significantly increase their financial success. This isn't just about having the foresight to predict where the market is going, but also having the bravery to take calculated risks. By doing so, one can not only take advantage of innovation, but also potentially shape the future of business and investment. Risks. Initiate investment early. Investing early is crucial, especially when compounded interest is involved. For instance, Emily invested $200 each month in a Roth IRA starting at age 25. When she turned 65, her investment had grown to over $500,000, assuming an average annual return of 7%. On the other hand, John, who invested the same amount, starting at age 35, had only about $250,000 by 65. This difference shows that investing early is important because your money has more time to grow from the power of compound interest. The U.S. Securities and Exchange Commission agrees that the earlier you start investing, the better. Investment can be a smart financial move that helps secure your future. One example of this is a group of college friends who formed an investment club. They pooled their resources together to invest in the stock market. With a small initial investment and monthly contributions, they diversified their portfolio and minimized risks. Over a decade, their collective investment outperformed the market, yielding an average annual return of 10%. According to a study by Vanguard, investors who diversified their portfolios across multiple asset classes enjoyed more stable and consistent returns over the long term. This highlights the importance of early and strategic investment. Starting your investment journey as soon as possible is crucial. You can open a tax-advantaged account or form an investment club to begin. The key is to make investing a regular part of your financial strategy. By doing this, you set the foundation for a more secure financial future. Cultivate a habit of financial discipline and develop financial savvy that will benefit you for a lifetime. And embrace index funds. Embracing index funds is a strategy championed by some of the most successful investors, including Warren Buffett, for its simplicity, cost-effectiveness, and potential for solid long-term returns. Consider the story of Anna, a teacher who, with no prior investment experience, decided to start investing in index funds. By allocating a portion of her monthly salary to a broad market index fund, she was able to achieve an average annual return of 8% over 20 years. This approach allowed her investment to grow significantly, outpacing inflation and increasing her wealth without the need for constant monitoring or stock picking. Index funds are a popular investment choice because they spread risk over a whole market, reducing the risk associated with individual stocks, according to a report by the Investment Company Institute. In 2021, index funds in the U.S. had a total net worth of $11 trillion, showing that both individual and institutional investors like them. One of the benefits of index funds is that they have low expense ratios, meaning that investors can keep a larger portion of their return compared to actively managed funds. This can save investors tens of thousands of dollars in fees over the life of their investment. Anna's success story, backed by compelling industry data, illustrates the power of index funds as a cornerstone of a sound investment strategy. By offering a straightforward, cost-effective way to participate in the growth of the economy, index funds represent a wise choice for investors seeking to build long-term wealth with minimal fuss. 8. Stay informed and continuously learn. It's important to stay informed and continuously learn to navigate the ever-changing financial landscape. James, a retail manager, does this by reading financial news, listening to podcasts, and taking online courses on personal finance and investing. This helped him identify a significant opportunity in the renewable energy sector early on, leading him to invest in a small but promising company. Over 5 years, that company's stock value quadrupled and significantly boosted James's investment portfolio. A 2022 survey by the National Financial Educators Council found that people who actively seek financial education feel more confident in their financial futures. A study by the Financial Industry Regulatory Authority, FINRA, also found that investors who understand basic financial concepts are less likely to fall victim to investment fraud. James's story shows that staying informed and continuously learning about financial matters can lead to tangible benefits. By being proactive in learning about finance, individuals can spot opportunities, manage risks, and secure their financial well-being. This commitment to learning not only helps with today's financial markets, but also equips individuals with the knowledge to adapt to future changes, ensuring long-term success in personal and investment endeavors. Now, if you want to learn how to achieve financial success, then watch this video next. And if you made it to this point of the video, please like and subscribe to the channel to see more content like this. Thanks for watching, and I'll see you in the next video.